All right. We're off to the races. Oh boy. Oh my. Here. Test. Mic check. 1, 2. All right. Interesting messages here. So I want to know the last time that any technical analysis actually worked out for AMC. Then you can talk about falling wedges and bull flags and whatever the hell else, but when's the last time it actually predicted something? I don't know. I couldn't tell you. So we'll check back in on this. We will check back in on that. But now we have margin calls incoming. Margin calls coming. Of course.
Joining us today and for your support. My name is Matt Stoner. Today I'm coming back with yet another AMC video. We're going to talk about a couple of different things. First of all, the possibility of a controlled squeeze by the Federal Reserve, and then also water down.
We're at the controlled squeeze part of the snake oil cycle. Okay.
Shares that have historically become naked shorts that lead us into the very position that we are now. Be sure to stick around, but before I get into it, please make sure to smash that thumbs up button for me and subscribe to the channel. And I want to give a huge shout out to Unstoppable Domains for sponsoring today's video. Now, guys, I have a huge announcement from our sponsor, blockchain payments in the future.
Cool.
As precedented liquidity. Unstoppable.
All right.
All right, guys, I did want to start out here. As we do know, banks, hedge funds, anybody in the financial business is facing an unprecedented liquidity crisis. We know this from the fact that between 2019 and 2020, it has been reported that about $48 trillion in reverse repo aid was given to some major banks in order to keep them afloat. They then allowed the hedge funds to either use this money or they themselves use this money to make many bad bets, a lot of short bets in the hopes that they will be able to get some of this money back. And then once again, we are seeing ourselves in the position that we are now. Now, Bloomberg has been reporting about the commodity market and the margin calls.
What exact position is that? Stocks are down. Okay.
That pose a macroeconomic risk. This is according to members of the Dallas Fed. And of course, this is from the London Metals Exchange. We've talked about this a couple of times before when they effectively, halted trading on nickel for a couple of days and then basically said, well, first of all, we're just going to let this billionaire that calls himself, I think it was like Big Daddy, something like that, do effectively continue to double down on his bet because he did believe that the price of nickel would fall. And then, of course, they went ahead and adjusted the price, didn't allow a lot of these trades to close. And while we don't believe that something like this exactly is going to happen in the securities market, it does show exactly how over-leveraged a lot of these companies are on short positions, and especially within the commodities market. Now, before I jump into any more of the article, think about what has been happening.
Yeah, because
recently.
People actually need nickel. Companies use nickel. It's an industrial metal. I fail to see the connection.
And feeling the pain if you drive at the pump. Now, generally, when people are buying gas, they're buying enough to sell it for the next month, 2 months, maybe even 3 months. So the way that gas prices are calculated are on what the possibility is going to be. There is no supply and demand here. It is effectively just a bad bet. So if you were short on oil and you believed that everything was going to go down and instead it went up, you are stuck in a position that you are unable to cover these positions. And we see what happened in the London Metals Exchange. Now, of course, the Fed has been taking a look at this as well, and they are saying that commodity markets should be tracked for potential macroeconomic risks. Of course, they're saying it is the latest sign that liquidity concerns in the sector have caught the eye of central banks and regulators. Now, according to a note from the Dallas Fed economists, including Jill Centino, who leads surveillance and supervisory risk analysis, ongoing developments in commodities should be monitored for potential impacts on financial conditions broadly. We do know that the derivatives market, as in terms of shorts, all of this other stuff, goes to about $650 trillion, and the stock market is not even close to that. So the underlying derivatives are so much more valuable, although technically they have no inherent value than anything else. Now, this is what we started to see in the prices in the stock market as well, where they made a lot of these bad bets. Some of them they're making money on, and then there's some like GameStop and AMC, where a community has come together and continued to drive the price of the stock up. But assuming that any major thing happens in the stock market, such as what happened with the price of oil, and any of these companies are also short on oil, they therefore are going to need more margin, not only to cover the short positions that they already have, but more short positions as well. This will lead to margin calls, then of course forced share recalls. So we are starting to see the interconnectedness in the entire market. Now, a lot of the conversation that has happened recently in the stock market has been quite a bit of what's happened with Elon Musk. Everybody knows that he has launched a bid to take over Twitter. He bought about 9.3%. BlackRock and Vanguard also upped their percentages as well. We have the Saudi royal family saying that they do not accept the offer of $54.20 that had been offered. But think about what happened with the stock, right? It is very difficult to make money on insider information or without insider information. So those people that were holding from the very beginning who just like the stock, they're not going to buy or sell on this news, have been holding for a long time. Elon announced that he was planning on doing, or purchasing about 9.3%. The stock shot back upwards. There are analysts that are saying that it should be a target price for this year with a sell rating at 30%. And these are the very people that are advising Twitter right now. And of course, one of the answers to trying to fight off this hostile takeover would be to issue additional shares of stock that could therefore prevent Elon from owning as much of a percentage. But because the stock price is so high, we are dealing with what is called a watered stock, which refers to shares of a company that were issued at a much greater value than the value implied by a company's underlying assets, usually as part of a scheme to defraud investors. In this case, not directly,
is he talking about AMC here?
Investors that do in fact stand to be
sounds like
most hurt. Same thing with AMC, except we do know that the underlying value in this case is higher. But if they did issue more shares of AMC, they would ultimately, be able to, or potentially devalue the stock because there would be more of those out there. Now, of course, term is, originated from ranchers who would make their cattle drink large amounts of water before taking them to the market. The weight of the consumed water would make the cattle deceptively heavier English, enabling the ranchers to fetch higher prices for them. Now, this, of course, has also been happening since even the mid-1800s. Between 1866 and 1868, Daniel Drew conspired with James Fisk and Jay Gould, who he brought on the board to issue these spurious Erie Railroad shares, thus watering down the stock, of which unsuspecting Cornelius Vanderbilt bought in a very large quantity, effectively buying shares in a stock that were not worth anything, that did not exist. And then effectively buying naked short shares, right? So we are seeing effectively what happened in the fact that they're buying naked short shares in, more of a tangible form. At the time they would issue a stock certificate. One of the reasons that I wish that we would still do that is because it'd be very easy to see how many shares you actually own. And of course, Vanderbilt lost more than $7 million in his attempt to gain control over the company, although Gould later returned most of the money under the threat of litigation. As a result, he conceded control to the railroad to the trio, and of course, there was the Tammany Hall incident and a Boss Tweed director. It was a whole sort of scandal that happened way back when. But what we're seeing now is a very similar possibility that these, hedge funds, these market makers, have created so many synthetic naked shares, or naked shares and synthetic shares, that whenever it comes down to it and they have to buy back the real shares, they're going to lose
no such thing.
Tens of billions of dollars trying to cover these positions, except they have nobody to litigate against except for themselves. Which is why one of the best things that we can continue to do is hold all of our shares, because these are the shares that they ultimately need to buy. And even if hypothetically any of us own any of these naked...
It's the only savings account I've ever seen where the value goes down. Seriously.
Synthetic shares. Ultimately, the broker will have to return them
That's
legally.
a horrible
idea.
So
at this point, all the H's really need to do is use AMC as a savings account, which is why the pressure continues to stay on them. Nobody is selling these shares. They're not able to recover these positions. So when it comes down to it, because we are holding so strategically, they are not going to be able to cover or close any of these positions because there are no real shares in order for them to do so. This, again, is a historical precedent of what happens when stocks are watered down, which is what they have...
Watered down. Okay. Right. So, okay.
Effectively done illegally behind the scenes, and whenever we're able to prove this, this will be one of the major straws that breaks the camel's back. They will have to cover all of these naked short positions, and of course, given the fact that the Fed is still trying to create or at least minimize the effect of a squeeze, which is what we saw in the commodities market, we are ultimately going to see a huge confluence of events that are going to lead us upwards very quickly. Now, these two things seem to be very different, but they are one in the same because of the fact that they are all going to be major catalysts that lead us to Moa. So as long as we continue to hold the line, we have never been in a better position than ever. Anyways, that's going to do it for today's video.
Okay. It's 8 minutes I'll never get back. Okay. This was, this next one was from Manuel here. Now, this is funny because Do I know this guy?
Good morning, retail investors.
So
One
it's
stop
his
in
last
here and make a
AMC video, last YouTube video. Chad Clifford. I don't know if I've ever seen any. Don't know. Let's see, are we supposed to skip ahead in this? Yeah, 3 minutes and 20 seconds. All right, here we go. Anytime now. Any time now you want to play. Oh my God. God. Embarrassing.
Good morning, retail investors. Want to stop in here and make a video. This damn well might be my last video. Listen.
Just let it play.
Here's how it goes. I had an exchange with another YouTuber this morning. A YouTuber that I apologized to because I made him feel some kind of way with one of my most recent videos. He claims that it was about him and only him, and the truth of the matter was, it wasn't. It's about the direction of the movement. I admit that I have a problem with making videos, and I'm not a good quality speaker. Sometimes I don't think about the things I'm saying and how it might make any one specific person feel. That's my flaw, and I owed up to it. In fact, I owed up to it in personal text messages. The answers I got were nothing more than anger. I'm okay with that. I said my piece, I owed up to what I did, and I said I was sorry. It fell on deaf ears, I'm okay with that. I only needed to do that for me. Listen, you can apologize to people, you can accept guilt, but it isn't up to me to make them to receive it, to be receptive. So that's that.
Okay.
I was also told that my stating that I'm not buying any more AMC was FUD. It's not FUD. I own 10 times the amount of AMC the average shareholder. I'm not gloating. I'm just saying that I want to diversify. Anybody in investment would say diversification is a good thing. So I buy GME.
Well,
I buy kohrs. Those are my stocks. I'm not really sure why I would say diversification is a good thing. So I buy GME. I buy kohrs.
I buy GME. I buy kohrs. That's diversifying. Hi, Chris. Happy Easter.
Those are my stocks. I'm not really sure why it's a problem if I share that information. It's okay for people to share how they're going to handle their investments, but if Chad Clifford, a guy who uses his real name, goes out and says, this is what I'm doing with my money, that's a problem. Well, here it is. I buy AMC, GME, and kohrs. I like to diversify. I've got plenty of AMC. I'm not selling my AMC. I'm going to hold it until the shorts close. I'm not sure where the FUD is in that statement, but whatever. So I'm clarifying with you, YouTube. AMC, I'm not selling until the shorts close. GME, yes, I'm still buying GME because I like GME.
All right, now we can skip ahead to 320.
Information that I thought was quality. I've grown really weary with our current state of our community. I will work with anyone who is positive in the movement, who is pushing us forward, who is in this for each and every one of us. And for a while, I was even in it with John Wick sniping. I was told that I'm following him like a baboon. Am I? No. When John Wick sniping came up with his video challenge, I thought it was a good idea. I still do. I think it's a great idea. It was smart. One of the things I liked about John Wick sniping is he was coming up with original ideas to buck the system. I'll give anybody that opportunity. Since then, John Wick sniping's, the way he feels about the community, I don't know. I left him a question about has his stance changed because he's trying to draw out the bots. If that's the case, it's fucking brilliant. But I was also told that I'm following like a baboon, and I shouldn't be. Apparently I went silent. Yeah, that's how I handle things. If I don't necessarily agree, with exception to Richie and I went at each other because I saw Richie directly in the beginning, directly taking advantage, in my eyes, directly taking advantage of you, the retail investors, and I got angry. Since then, yeah, I go quiet. I go quiet because I know the MOAS is inevitable. It isn't a short squeeze just in AMC, YouTubers. It is a short squeeze MOAS. It's going to be every meme stock that has been shorted into oblivion. It doesn't matter if you fucking buy AMC or you buy fucking GME or COS or Bed Bath & Beyond.
Settle down, buddy. Settle down.
It's bigger than this simple little package that we're so involved in. And I'm getting fucking angry with this crap. I'm getting angry that I've been threatened. You want to threaten me? You don't know the wrath that's coming? Fuck that. This is YouTube. I could close this shit down right now and it won't matter. Why? Because whether or not you make a video saying that I'm a bad guy or I make a video calling that shit out, it ain't gonna matter. The MOAS is inevitable. I'm telling you all, not financial advice.
Trust me, bro.
Buy and hold. That's all you gotta do.
Trust
me, your stock, buy and hold. The reality of it is the market is going to crash. And when it does, you're going to get rich. There's no ifs, ands, or buts about it. You know what, come to think of it? This is my last video. For all of you out there, I've enjoyed your company, most of you. But I know this is inevitable. I don't need to make any more videos. So bots and whoever else that wants to fucking travel in here and say whatever you want to say, do it on fucking deaf ears. I'm sick of all of it. I'm going to collect my bag when this is over. And those of you that I'm friends with, that we've already exchanged numbers and emails and all that great stuff, we will be in contact. The rest of it, just buy and hold. You'll be fine. You don't need me.
Okay, he's going to go collect the bags that he's holding. And okay, so yeah, market crash is the catalyst. Absolutely. You know, because that will force... They'll lose so much money on everything else that, you know, they'll be forced to cover their... I don't know. I don't know. That's the... That's it, yeah. I mean, remember, they were talking about this last year, too. They talked about this. Short the VIX talked about it. They all did. But I seem to remember him specifically talking about it. The market's going to crash and the meme stocks will squeeze. Makes perfect sense to me. I don't know. So I think that's the first and last video I've seen by that guy. So that's good. Efficiency. How old is this? Did Dave Portnoy really just talk about AMC on Tucker Carlson? Really? This is one of those clickbait channels. Buy the dips.
Lost so much money it needed a bailout from 2 other hedge funds. Meanwhile, some of the investors on Reddit got rich. But getting rich was not the whole reason they did it.
No
they
fucking
also wanted
way
to send
that
a message to the hedge fund managers. Here's one of the Reddit guys, a man called Justin Speak, explaining.
I'd be lying to say if there wasn't some pleasure out of the fact, you know, I'm a pastor and Jesus tells a story about this rich fool who has an overabundant harvest that's more than he can store. And rather than give the excess to those in needs, he chooses to build bigger and bigger barns to store it for himself. And rather than share the billions with the less fortunate, they've built bigger and bigger barns for themselves. And so, yeah, I was 100%. There was a part of me that thought, well, it will be fun to be a part of this moment, to see this moment where at some level overnight, these investors are losing their investing lives. It's being demanded from them. And they're left wondering what they get, who's going to get what they had prepared for themselves.
So obviously this is from last year. Obviously.
They've built bigger barns for themselves. Well, that's true. Not to mention epically enormous art collections. The hedge fund people, in case you haven't noticed, in case you don't read the business press, are very proud of their art collections. Very aggressively, flamboyantly proud. despite the fact that a lot of their so-called art is ugly, overpriced garbage, cheap, garish crap that people will laugh at a generation from now. Robinhood, which is used by...
Good job, Tucker. You tell them what art is good and what art is bad. We'll trust you, buddy.
Independent investors to buy and sell stock, banned its users from trading GameStop shares, as well as from several other company shares. No one even knew that was...
No, they didn't. They didn't ban you from trading them. You liar. Look at this liar. Banned from trading.
It's illegal. Jesus. Maybe it isn't, but Robinhood did it anyway, and they did it under pressure from the hedge trading GameStop shares, as well as from several other company shares. No one even knew that was legal. Maybe it isn't, but Robinhood did it anyway, and they did it under pressure from the hedge funds, who they really work for.
Oh, okay.
So much for the free market you're always hearing about. There's nothing free about it. That turned out to be a lie. Turns out that what Wall Street really hates is outsider trading. The idea that people from outside their world might be getting rich. It gets to the heart of what you've been doing under quarantine. And I'm wondering what lessons we can draw from this. What is happening exactly?
You know, I've been trading heavily since quarantine started, and I was shocked by this. I personally did invest in AMC and Nokia. Those are two of the stocks that the Reddit guys and the Wall Street Bets guys were pushing. I believed in the power of the internet. When I saw what Robinhood was doing, ironically, Robinhood take from the rich and give to the poor, even though they do the exact opposite, I was stunned. I think it's criminal. I think there has to be an investigation. I think people have to go to jail. Whether that actually happens, I don't know.
Nope.
But I've never been more...
Well, since this video is from last year, we know now that nope, nope, and nope.
And Donald Trump Jr., both on the same side of an issue, you know something's dramatically wrong.
This seems like a betrayal of the basic promise of American public markets, which is they're transparent. It's purely meritocratic. That's why you've been able to make dough during quarantine. You make a bet, you're right, you win. How amazing is it to discover that that's not real?
Apparently it's real for them. And I love the lectures. You hear it from the hedge funds and the suits, as I call them, but they'll say they're protecting you and we're protecting you versus yourself, and people don't understand the risk and margin. And then you look at them, it's like, buddy, look in the mirror. You're doing the same thing. The hedge funds are betting against companies. We're betting on them. With money and margin, we're doing the same thing. The only difference is we're winning and you're getting your teeth kicked in, and you just said, time out. We're changing the rules.
What a bunch of bullshit. Personally, I'm sorry. Quite frankly. Okay, so clearly that was an old clip. Now, this guy obviously didn't change his tune here. Get ready for this. $25 per share. Kiev Angelo. Nice. $25 per share. How exciting is that?
Well, guys, what could I say? Is AMC on the verge of a next run-up? Why I'm even speculating about this? Well, guys, remember, after the latest run-up, after $72 and then the stock declined, we saw a couple of bot campaign asking people, encouraging people to sell at $300, right? Not sure why these bots disappeared. Did they actually achieve some goal, or they failed big time? The question, the matter is that yesterday on my late night video, a lot of these bots actually reappeared. And they're coming with the price targets. But now, something even crazier is happening. They're not just asking people to sell AMC. They're asking people to buy different stocks. They're asking people to buy Twitter and Robinhood, which is unfreaking believable. So again, these bots appeared in the past after crazy run-up, after crazy price action from AMC. The question is, are we again very close to some crazy run-ups? This is why this bot strategy appears. Remember?
Well, you just said it was after the crazy run-ups, so I don't know. Might have answered your own question.
But these bots are not creating themselves, right? Somebody is thinking how to program them, what kind of information, where they're gonna comment. Everything is pre-planned, pre-arranged. So, guys, it's kind of makes sense. Something it's about to happen, right? We're not trying to create a hype or something, but what would be the reason
No?
after
Oh, really?
so many months these bots to appear
We're not trying to create the hype or anything like that. No,
here
not trying to do
right
that.
now? Let's go over the bot section. Look at this. Hoot and Twitter are looking like strong buys, apes. AMC is boring now. I will be happy to sell at $20 and move on. I will have no choice but to sell all my AMC stock. It doesn't squeeze on Monday. I can't be back holding when places like
Jim
Twitter
Rayfish.
and Hoot are killing it.
That sounds real.
That's not at all. Telling you guys, more than 80%, approximately from my late night video yesterday, were bots like this.
Well, that's a reflection on you, I think.
I agree with you, apes, saying $20 to $25 is fair. I can take my gains and move on. School's taking too long and we can't keep holding. Oh my gosh, apes. I recently graduated college, so trust me, I am very intelligent. Yes, AMC will run this week, but we can't keep holding for a squeeze. $20 to $25 should be fair sell point. Oh my gosh. Bots are getting better and better. They even have this laser eyes look like stuff, right? Unbelievable. They're using terms, apes, they're using squeeze, right? We cannot hold too long.
Oh, yes.
Smart money too, right? But the apes know this. Apes saw 15, 16 months. Nothing bothers the apes. So, like I said, guys,
Oh, really?
this is how I see the current.
Nothing does? I bet something does. Here. Oh, let's check on the thing. Okay. S&P, NASDAQ 100, Russell, crude oil, natural gas, and the VIX. Fun times. All right. Moaz stream last night. It's a sign. Right. Moaz lives in your heart unless you're a red-blooded AMC and okay. How diverse is your current investment portfolio? I'm not going to lie that I've been getting discouraged at the never-ending AMC price manipulation by these hedge funds. Still holding though, not planning to sell. Okay. Most my investments are currently in AMC. Is this stupid? Still not selling. Just an FYI. PSA, the market's open tomorrow. Okay. Moment of appreciation for 1802 because you know they wanted it under 18. Sounds illegal. Hedge fund, market maker. Oh, look at this big dick. Currently own $35,000. $35,000 sign. Dude, the dollar sign goes in front of the number worth of AMC and 15,000 worth of Wyckoff Mining. Just loaded another 14,000 for AMC will be available on Wednesday. We'll have almost 50,000 worth of AMC shares, just over 2,000 shares. Oh my God. Good. If I believe that. Okay. Hilarious decisions. Had an $18 call option expire Thursday at 4 p.m. in the money. Skin of my teeth. 1803 to 1805 range. Cool. I'm in the money. Then gets automatically exercised. Plus 100 shares at a cost of $1,800. But now I'm in margin call zone. For those of you unfamiliar with options. Side note, financially, I'm not doing so hot. Well, okay. Friday to Saturday. Maybe I should sell some, recoup, afford to pay bills this month without blah, blah, blah. Fast forward to now, Sunday, 12:19 a.m. Hear this bullshit ape coin. Realize it's a distraction tactic from hedge funds. Now we'll be eating beans in a can and Roman for a little while. TLDR, they try and trick us with crypto and other stonks. They would not do this if they weren't in trouble. I like that justification right there. That's good logic. Very good logic. We are right. We own the float. It's coming. Haha, fuck yeah. Much longer than I would have thought. Wampum. So this idea that, well, they wouldn't try to get us to sell. They wouldn't try to get us to buy all this other crap if they weren't in trouble. When in reality, you don't know who the fuck put out this bullshit ape coin. But somebody did, and all they want you to do is to buy that. I don't know if it makes sense to read any more into it than that, because if you've identified this group of investors as being kind of gullible, then why would you not try to spam them with all kinds of shit? You know, the way I see it. Should have taken that road, probably, personally. But anyway, but yeah, no, the only reason that they're doing it is because they're in trouble. Terrible. What's the new floor? Haven't heard much floor talk lately. Floor talk. All right, floor talk here. My floor's been 20 million for a minute. Oh my God, come on. And for anyone calling that crazy, $40 billion worth of price discovery has been dark pooled. And that doesn't include naked shorting, ETFs, or options. I mean, dark pooled, that's not a verb. Sorry, dude, it's not a verb. Chris is saying, John Wick Sniping says the no squeeze video in response was a bit to attract/expose bots. Oh, really? Okay. Of course. God. Delusional. Okay. That post. Just use AMC as a savings account at this point, which is why the pressure stays on. Okay. The only savings account in history that's that volatile. Best savings account I have ever had. I'm up 64%. Never had a savings account come even that close to that kind of return. And then I am down 50%-ish, but in the long run, it will beat a savings account. Okay. It's a good savings account if you're okay with losing 50% of your savings within 2 months. Keep that same energy 2 months from now. Yeah, that's what everyone said a year ago, and look where we are now, minus 50%. What's your point? We're not selling at this price. My point is that this is a losing savings account that, after 1 year of investing, has resulted in most people losing over 50% of their savings if they haven't sold yet. And why would laugh at that? We are committed to this. Committed to losing your money. Yes. Okay, so did you sell your position at a loss? Yes, we have to. Not yet, but let's be real. I've held for a year. Promises of moon this week. No, sorry, moon this week. It's all baseless hype. It has literally only been losses. Why would I continue to buy in hopes of a squeeze when I can confidently compound my money in more stable investments? I'd rather not throw my money into something I know has only been trending downwards for the past year plus. But you're fully aware the downtrend is only because of naked short selling and high-speed algo trading, right? You done need to keep buying. I, myself, have nearly 4,000 shares, and that's more than enough that when the squeeze happens, I can retire. Of course, I bought in at 10 bucks, so I'm still green. All I'm saying is this is not a get-rich-quick play, but it will pay out. I'm going to make more money from this than I could ever earn in my life, so I'm willing to be patient. Mooj is fully aware of that. My problem is the culture in this sub and posts like this, praising those who dump their life savings into this stock only to watch it slowly burn away in hopes of a moon. It's laughable advice and can ruin lives. At the end of the day, it's their choice to invest or not, but all I'm saying is that it's ridiculous to assume that this is a profitable savings account if you didn't get in back in early 2021. I understand your frustration. I will hold until MOAS because I can afford to. I feel bad for those who cannot. Wow, great way to end it there, Chef Nicholas. I feel bad for those who cannot. They are going to miss out on life-changing wealth, or they'll cut their losses in their savings account and actually end up in a better position than Chef Nicholas will. Who knows? Who knows? Okay. Could AMC start to get into sponsorships like F1? What are your ideas? Here we go with the ideas. Formula One, I guess. Anyway. So many ideas. They have so many ideas. Good to have ideas. Okay. On Angelo. Made a good video. Shorts are broken. AMC and GME data you need to see. Okay, we need to see it. We need to see
Big, beautiful buy signals coming up on Monday. If you guys are looking for the bounce, this is the video that will give you the data. Watch until the end because I'm going to tell you about the tools that are giving me the buy signals on the stocks that you guys care about.
And what do you want to bet? He'll sell them to you. He'll sell you those tools. Yep. Sure he will. Okay.
How much money you guys are going to make the different kind of investments, including how is the Pelosi ETF versus the SPY and other questions like that. My name is Andrew. I'm a data scientist here in Silicon Valley. I take a look at the options chain. I take a look at the short interest. I take a look at everything that you need to be able to pay attention to, and I take a look when the data is broken.
And I use Webull.
Let's take a look at why AMC and GME are going to have a beautiful Monday, a bounce off of the 4/13 trading day at $16.94 on AMC. Same thing with GME, but double bouncing off at $141.67 has left it in more green zones. And that's why GME has just gotten that buy signal. This is from Lux algorithm. It gives you the buys and sells, makes it easier to understand exactly where those trades are going to happen and when the best times are them for inflection points, right? When those MACDs cross over. If this is confusing, watch until the end. Hit that like button until this video gets 1,200 likes. Make sure to count up which one you are and then comment down below because that destroys the algorithm. It defeats it. And you and me, we're heading to the moon. First of all, let's take a look at the last time we had that soft buy signal. It was all the way back in March 17, 2022, right? This was when GME was at 75 bucks, would have gotten you all the way up to 204. In fact, that was going to be a double top before you would have been able to see some serious doubt. So that is where that price action would have given you 2 sell signals in a row, and that would have been that. Understand that AMC and GME are both on this trading app. You can basically use anything from crypto to currencies alike. So let me just take a look at Bitcoin, just so you guys can see what it looks like for a cryptocurrency. A lot crazier, but on the 15-minute chart, right, 3 buy signals in a row.
Not really that
you zoom
much.
out a little bit, go into an hour, have more conservative signals here. Right now, it looks like Bitcoin is still on a downtrend after trying to break out of 41,000. So BTC, right? You can take a look at whatever you want to see. Dogecoin, you want to take a look at SHIB, you want to take a look at Ethereum. That's up to you. Let's take a look at where AMC's data is. First of all,
okay,
it's missing.
Here we go.
Ortex has not applicable for a lot of these fields. Don't fret, likely because the computers that are calculating and scraping the internet didn't count for Friday not having any trading activity at all. Proves that, you know, somebody is coding Ortex, somebody's building Ortex, and people shouldn't be freaked out. About 20% on that short interest for AMC. Still
That's
about 102
a brilliant
on
conclusion.
500 free float.
It shows that somebody is building Ortex. Somebody is coding Ortex. God, that's a technical data scientist answer.
Taking a look at where are the AMC hedge funds now hiding, pay attention to the fact that there's a lot of now just data.
Where's Joey at? Is Joey still here? Where the hell's Joey? Joey, are you still here?
Posts on the interweb space, right, for both Superstock and for AMC stock. Be careful, because right now we're still chasing the data, still trying to make sure that the Ortex guy and the other people can still report what they need to report. And we're going to keep it that way. Data first, as always. Before we look at the technicals on AMC and GME in further detail, we're going to take a look at MACD.
Taxes.
We're going to take a look at portfolio and just here, right, that at the very peak of AMC here, about 2,700%. Still, huge price increases in a very short amount of time. What I've done here on Composer is essentially taken it against the ARK or Gold. This is an ETF that someone else has built. Someone else has already built like Pelosi ETFs, right? Just comparing that to the SPY. So understand that this is one of the coolest ways to be able to start building. I started playing around with this
exactly the same as the SPY.
Doesn't require any code, doesn't require any spreadsheets, and it's free to use. There's also $1 trillion invested in quantitative strategies. Almost none of them are regular investors. So in order to build your own quantitative strategy, you need to, 1, know how to code, right? Usually. 2, Excel, be an Excel master, and 3, have expensive trading software. So luckily you don't have to have any of this. I just started pulling this up completely randomly, haven't even logged in yet. So you can invest in their pre-made, vetted, and strategies, or design your own, and you should be able to take a look at the disclaimer in the dibbly-doo, the bottom down below. So make sure you guys understand that there are tools out there, and Composer is one of them. Really like how they are combining code with people who don't know how to code. So that includes you or Professor Meatball, because even though he's a professor of data science, pause, right? He can't code. He literally cannot. So therefore, he's going to be able to use Composer. Take a look at, for example, I just love how this one presses the run button. You can take as basically any time period you want. This is about a 2-year time period from 2020 into 2022. And here is where that Pelosi ETF would have started picking up right here in March 9th, 2021. And here is its performance so far. Okay, sick, sweet, epic. Let's take a look once again at that options chain, because we have to understand where the gamma squeeze is coming. We have to pay attention to the $20 strike, right? That's about $500,000 of puts, and on the far left side, so $15 and $17. So that's around $130,000 or $300,000 respectively of puts aggregating on the far left side. You can also go back with Option Sonar to a couple of days prior, right? You can essentially pull up any day you want and take a look at that. So let's compare this options data with...
Guess what? You can do that with Thinkorswim. And you can go back as far as you want to.
From May, because we're getting closer to May, and that was when in 2021 we saw one of the craziest options activities ever. So even just the 13th, right, we had $2 million of puts at $25 strike. Let's go all the way back.
Oh. All the way back.
Let's do May the 13th. So that's about 11 months ago. Maybe the data doesn't go all the way back that far. Okay. So if you wanted to be able to pay attention to the data, you're going to have to be able to grab it early, like here. So this is where
use,
the options data was...
Thinkorswim, because you can go back in time. Yeah, all these newfangled websites. Good.
Still going pretty hard in August, but we are looking at $2 million at $30 strike and $2 million of puts in $24 strike. So same situation as when we were having the worst attacks from the shorts and from now the more bearish options chain players. So pay attention to the fact that we are having big aggregations of puts, but those are not put walls. We're going to be able to push through them, and we're going to be able to see
not put
all of
walls.
you
Okay.
the money. Thank you guys for reaching this part of the video, and we'll see you guys soon.
Okay, that was useless as well. All right. I can't remember if I had him on here or not. Is he on here? I don't think he is. I think I left him out. No, yeah, I left him out. Fuck. Okay. Well, he can go right in this little spot right here. Dog is the smart one. You're right. I think you're right about that. Okay. Extreme gains. He's got the algo figured out. So, you know, we have mindlessly bullish, mindlessly bullish, mindlessly bullish, old last year clips from the news, and then we have somebody who's figured out the algo. Figured the algo out.
What's up, YouTube? What's up, Extreme Gains family? I'm Chuck. This is Extreme Gains. I am not a financial advisor. Nothing I say is or ever will be financial advice. Please do not take it as such. Today is Sunday, April 17th, 2022. And this is the AMC, GME, and SPY Algo Exposed weekly update and preparation video for tomorrow and beyond. Happy Sunday, happy Easter. I hope you're enjoying your weekend and your Sunday. I want to go over all the regulars. I always go over here my snake algo for AMC, GME, and SPY, and macro comparatives for all three as well. So, with that said, let's dig in. On your screen is AMC and my snake algo. AMC on Thursday finished the day down 2.75% at 1802. The previous snake had fulfilled in its entirety. I went ahead and clipped, overlapped, and since then it has given fulfillment of Wednesday and Thursday's projection from this current snake.
So he copies and pastes the price action and then moves it over? It's kind of what it seems like.
The indication from it moving into tomorrow and the rest of this week looks to be a move up potentially tomorrow after short-term consolidation in the morning to about the 1850-ish area. And then it looks like some consolidation throughout potentially the rest of the week with a potential for this pullback by the end of the week. Then at that point, if and when it were to fulfill this in its entirety, we would go ahead and look at this as potential continuation of fulfillment from the snake. As you know, though, keep in mind...
Fulfillment from potential continuation of fulfillment from the snake. Okay.
Some of them do...
that I was going to say, this Extreme Gains name sounds like a male enhancement product to me. And then now he's talking about fulfillment from the snake. I don't know.
In their entirety, like the previous one did, but the one prior to that left the tail end on it that did not fulfill prior to its diversion. So if it were to divert leading up into this prior to this happening, then I would clip another one and we'd be talking about that instead of this one. So that's why I said if and when we get here and we get all of this fulfillment like it's indicating, then we'll be discussing this if we have not diverted from that yet. But nonetheless, there it is to look at. When you zoom out on this, what it does indicate is potentially, and I don't know if this would be the full macro double prior to the move up, or if this would be part of a larger macro double that it would want to put in prior to the move up. But it does look like the beginnings of that if it were to start and continue to fulfill in this manner. That is the snake for AMC. The macro comparatives for AMC that I've been looking at, there's one macro comparative in two different positions that I've looked at. The macro comparative is from the macro descending wedge and the macro double prior to the January 2021 run up. And this is the bullish case position of it and its previous fulfillment. And the indication from this according to me and what I can see moving forward, and what it looks like to me is potentially some short-term consolidation. Looks like tomorrow potentially a move up to around the $22 area, $21.75, $21.80 area, and then potentially this move to $25 or $26 in the middle and or latter part of this week, followed by a pullback potentially by the end of the week.
Wonder if he ever reviews,
just like the snake,
like whether he was right or not on this thing, or if it's just, oh, it looks like this, and then the next time, oh, it looks like this, but this doesn't really match up here. I don't know.
If and when it were to fulfill continually in this manner, then we would go ahead and discuss the rest of this throughout. But there you go. That's the rest of it and what it looks like if it were to do so. Then the second position, which is the long-standing position of the entire macro double-double on current. And
so this is all based on, oh, it's going to repeat the same patterns, which is garbage.
About where to, I have been positioning this, whether to line the top here.
Everything just magically will line up to be exactly the same as it was last year. That makes a lot of sense. Doesn't really work like that, especially when conditions are totally different. Got here, SPY. Oh, what's he going to say about the S&P? Better hear this.
Called the extended version, the blue being the through my eyes. I need to write a song, Through My Eyes. And then last but not least, there's SPY. And the macro comparatives I've been using for SPY, it's the same one from the 08-09 correction and crash. I've used it and called it in two different ways, one of which being the red, which I've called the extended version, the blue being the long-term version for obvious reasons, the length of fulfillment, projection of fulfillment that they have given in their current positions. Where we're at within them, both are right here. I do believe we are still within shot of it essentially making this look like a mirrored inverted move if it were to go heavy bull side this week and get back in line with the long-term version. If not, it appears like it is in this downtrend, obviously, and it does, according to the extended version macro comparative, indicate and project downside, continuation to downside this week. The snake algo for SPY, the previous one, I went ahead and clipped and put it back in to where I thought it would be in its compressed version. And then we did divert from it in that position. So I went ahead and clipped just like I did with AMC and GME to see what it gave me. And here's what it looks like. Same thing, overlap into Tuesday, fulfillment of Wednesday and Thursday's movements. It does look like potentially short-term move up.
Does it matter
and then followed by continuation to downside. To around the 429, 428, and then consolidation throughout the middle of the week, and then potentially this downside continuation move going into the end of the week. I would gauge that moving into tomorrow and see if we continue to get fulfillment in this manner, and then we'll be talking about that moving forward. But that's what I'm looking at with SPY, with GME, and with AMC, and that's what I got for this video.
Okay, sweet. Don't really know how that's an algo. It's like more like pattern copying and pasting to me. I probably just don't get it, right? I wanted to show you guys this really terrible video because, you know, here we go. Hey, it's plug and play. Yep. Good Lord. Let's copy. What's going on? Let's copy over the pattern from 2008. That'll work. Yeah, that'll work. Let's plug in the, bear market recession module. Let's redo 2008.
Check this out. Now, this has been there for about 30 minutes now, and that's a decent block way off the price. So if we check out this little post, right, we can see that there was a lot of buying and sell orders coming in. I think this is the level 2 or time and sales of Webull, I believe this is Webull, Webull, whatever you guys call it.
Webull.
There's a lot of orders right now. The spoof orders was something that we were watching.
Okay. I love when they make a big deal out of this. I love it. I love it.
And something that we
it's
were
hilarious.
I mean, understanding, right? But when there's a sell order, right? I mean, that's not a spoof. Most of the time, it's usually low buy orders.
That's not a spoof.
Or it could be sell orders too, right? So if these low sell orders, let's say there's 13,000 shares for real, this is some big whale. Right, and that big whale knows that something big is coming up. And look at these.
Or not, or it's somebody who thinks that they're going to be just some idiot, right, from Reddit, putting in an order. Okay, yeah, or it's a whale and they know something's coming, so that's why they did it.
These numbers, it goes from 19 to 30, 3270, 54, 108. In 308. The reason why I'm looking at this and kind of questioning everything is because, guys, this is some size, right? If someone is holding 13,000 in AMC right now, I think that's over a $250,000, right? A $250,000 is being held, and that's a huge whale that potentially wants to sell these shares at $108. And not just that, we had a huge ton of put sweeps that could have been hedges that have came in, right? So all these little things are completely starting to add up. Right now,
well,
of course, these are the sellers.
I mean, it's like 1.5 million at 108, but I mean, they're not going to be sold at 108, so you don't know what they bought them at. But yeah, anyway.
Right, but these sell orders that are 108 per share, 13,000 shares, $30 per share, 6,007. So this right here is, I think, about 180 G's that they're trying to sell for. This right here is about a couple million. I think 13 million or 1.3 million, something like that, right?
13 million or 1.3 million, something like that.
We can understand from this is that there's big money, right? And the big money already has some of their orders placed. But I mean, if we look at the last one, it's at 308, guys. 308 as a sell price, 325 shares. Will they ever get filled? I mean, that's a good question. Or were they already filled? That's already another good question.
No, it's not. It's a terrible question. Those are terrible questions. No, the orders have not been filled. I can say that with certainty. Good Lord.
We don't know what this stock is really trading in the dark pool, right? But these numbers,
my God,
whales kind of makes you question a lot. Is it really trading at around $100? Is it trading around 108? Why would a whale try to place a sell order, right? Like something weird is going on. I want to know what you guys think down in the comments down below. Or do you think it's a different ape? It's someone that's just trying to get out as soon as possible. What do you guys think this is? It doesn't look like bullshit. A spoof order.
It's nonsense. We all know that. Uh, 13,000 is 0.003% of the float, my guy. That order isn't doing shit. There you go. Videos are going to do. Make your money, bro. Okay. Just thought that was funny. And if you go on Reddit and look for this post, it's even more comical because the person who posted it has no clue what any of it means. And they're talking about pushing the bid price up, and I mean, it's just, it's something. This will be John Wick Sniping's last video, except it won't. But did he put out another video after that? It's the real question. Yes, he did. So he's ready to resurrect AMC in South Beach.
That's right, AMC. John Wick is here on South Beach, ready for tomorrow, baby. Let's check out what John Wick's up to. For all the haters, all the whiners. Oh, there wasn't really a test. Wow, wow, wow.
Wow, he's so cool. Wait What the hell is this?
Does loser this? No! Does the Commander 35 lose? Nah, he ain't never seen a day like this in his life. All right, we found a couple fans here that want to be in the
found a couple teenage girls. Oh my God.
That's right.
They're like, we're not old enough to invest or have an account, but go AMC.
A little walk in the fucking park.
Poolside honesty.
Wherever he's at,
right.
Park, or a little walk on South Beach. That's right.
I mean, I'm digging his, like, foreground color, background black and white effect he's got there. That's cool. So, you know, AMC was a scam, my man. GME was the short squeeze MOAS play. AMC was the broke people play. God. Side honesty. Oceanside honesty. How about that? Doesn't have quite the same ring to it. Oh, look at him. He's on the beach. And now it's not loading. So, you know, we'll just take that as a sign. Don't know. All right. Cramping my style here, internet. Ooh. Ooh. Oh. Let me get this off here. Shit. VIX is up above 24. Couple more videos and then gotta have Easter dinner. Okay. BlackRock firing whistleblowers. Elon Musk dropped a bombshell on AMC stock. Ill knowledge. The new AMC movement. The new AMC movement. $50 million bullshit. Live Volkswagen squeeze. From that fake live video that the Wolfpack guy put out. Okay.
What's going on, my silly little motherfuckers? All right, listen, it's a simple video, but I think it's long overdue. Somebody brought it up on the comments. I'm just sitting down here just like taking time to just recover the head. But this had me laughing, and I said to myself, okay, I'm going to take this to the next level. Somebody said we should bring Al back. So my thinking is, let's just start this 100% movement. Hashtag bring back Al. Because let me tell you, I think it's gotten so boring lately, and we need Al back. Like, not to poke fun at him, just because, one, I'm not down with the whole woke agenda, whatever. So bringing back Al, so what? He was freaky. I don't give a fuck. Let him come back. At the end of the day, he'll fit right in with the AMC fucking universe here. So start it now. Idiots. All over the place, so Al can see this. You can see hashtag bring back Al. Hashtag monuments for life. Whatever you want to do, but bring Al back, because at the end of the day,
21,000 views.
I mean, I want him back. Whatever, it would be fucking blast. So he didn't do nothing wrong. I mean, whatever. At the end, some of you motherfuckers are more freaky than Al. So at the end of the day, hashtag bring back Al or hashtag monuments for life. Let's bring that motherfucker back.
Okay, so fits into his theme of really kind of nonsensical videos, right? All right, what is this?
There's nothing that grinds people's gears quite like a CEO or executive of a company writing themselves a sizable check. Maybe reminiscent of what politicians do. Maybe making you feel some sort of way despite the fact
Reminiscent of what Adam Aaron did. Oh,
that your investment that you've been in for 5, 6, 7, 70 years has only returned you 5%. And you see these guys getting 10, 50, $100 million checks, billion-dollar checks for what you feel is an unjustified cause. Well, today we have a story none like any other with the PG&E CEO. I first stumbled upon this on Twitter, and I thought that there were some learning points. But before we can get into those, we must first understand the situation. Check this out. Environmental Working Group PG&E CEO earned more than $50 million in 2021. While millions of California families struggled financially in 2021 due to the coronavirus pandemic, Pacific Gas and Electric CEO made over $50 million for leading the reviled utility with a history of bad investments and punitive energy bills. Now, most would say this is an unjustified check. And what I would tell most of those people is, you're wrong. And I'm going to tell you exactly why you're wrong. Check this out. Here's the tweet itself. Justified by the CEO. This may or may not be a factual email, which I'm about to show you, but we're going to pretend that it is for the time being. Team, this is coming from the CEO. Over the past few days, you may have seen news stories about my pay that we disclose as part of our normal annual reporting. These stories are focused on a big dollar number without any background or context. It's important to me that you have the whole picture. The first thing to know is that my pay as a CEO of PG&E is determined by our board of directors based on their review of other utilities of our general size and complexity. The board even uses an independent expert to help them in this work. Wow. My pay is targeted at the median of this review, and in fact, my annual compensation for 2021, about $12 million, is at or slightly below the middle of the pack. The second thing to know is that most of the $51 million number we reported and the press focused on so heavily relates to compensation I already earned at CMS Energy in Michigan, my former company. My pay at CMS was based on its overall performance over many years. At the time I left, I had a significant amount of this pay, about $39 million, coming to me in the form of stock and other incentives. Because that compensation would be forfeited when I changed jobs, the PG&E board of directors provided me with a one-time payment, a little handout, to make up for what I was losing. While I love PG&E, I wasn't willing to sacrifice multiple years of pay at CMS to come here. I hope you can understand that. Now that you've gotten this very in-depth and what seems to be a reasonable explanation as to the entire context of the story, this CEO essentially was working for a different company, and that company owed them about $39 million, and the CEO was not quite willing to part ways with that pay. Years of hard work, years of slaving at the desk, years of pushing those papers at the meetings, years of going over to the water jug and seeing that the water jug's empty, so you gotta go get another water jug and bring it over to the water jug so you can get some actual water in your foam cup. These are tough times, guys, all right? This is a tough situation, and I think people should be more understanding, but alas, they are not. See, there was a reply to this tweet that I'd like to share with you. Having your multi-million-dollar cake and eating it too. This is them paraphrasing the entire situation. I just want you to know, each and every crumb I took from all you peons was not only worth it, but just. The alternative was to keep my previous job, and well, that was slightly less convenient for me. You understand. Now, this is such a cold take. All right, that $39 million was her money. No matter what way you slice it. This CEO deserved every single penny that she got at the expense of her shareholders, at the expense of the executives, and at the expense of the peons in California. All right? That was a deserved check. And if you still feel some sort of way, you're reading this story and you think to yourself, well, this isn't fair. What about capitalism? What about my investment in a company? How is this just? How is this fair? The CEO made a crap ton of money and I'm just getting the shit stick. Well, I guess what? I've got 5 tips, 5 solutions to help you process and sort of cope, go through the 5 stages of grief.
Oh boy, here we go.
We're going to start off with number 1. Number 1, be the CEO of PG&E. This sounds like a difficult task, but if it makes you angry that she made that much money, $39 million bonus just for working for the company and $12 million simply just for existing and showing up to the door, well, you can make that money yourself. All you got to do is, go over to the company and say, I'm going to be the CEO now. This is my house now. Kimosabi, bitch. All right? Hand over the reins. If you can't be the CEO of PG&E, maybe you just should stop bitching. Number 2, inherit a trust fund. You can't be mad about other people's money if you already inherited your own money by a handout, right? The CEO got a handout for simply existing, simply for showing up to the door, signing the contract, 39 mil, bam. You don't like that? Maybe you should consider inheriting a trust fund. Now you might be saying to yourself, Trey, well, I'm not rich. My parents aren't rich. My grandparents aren't rich. My grandparents' grandparents aren't rich. I don't even know a rich uncle. Well, guess what? Fuck you. Have you ever thought about maybe changing families to someone who is? Huh? You ever thought about being born into a family with money? That may solve your problems. You might have to think outside the box a little bit here and look into what's really at stake, which is you don't like the fact that the CEO made a lot of money. All right? Think about inheriting a trust fund.
Creative, cynical.
Number 3, start a mafia and run an
creative. I'm not rich, Trey. I'm not rich.
Elaborate tax evasion / tax theft scheme. Now, this is something that was very mediocrely performed by the previous mafia that sort of existed back in the day. They used to skim pennies off the dollar on tax from the government. Well, this company, PG&E, being an energy company, sort of profiting off of energy, have you ever thought about just skimming off the top of what these guys do and committing a felony? Huh? Perhaps tying yourself up with the family? Perhaps making money by taking from people like PG&E? You can do it.
God, he's so obnoxious.
Very, very doable. I mean, the mafia's done it. PG&E's doing it. Other companies do it.
PG&E's doing it.
Why don't you start up an elaborate tax theft scheme against the gas and oil sort of theft scheme that exists presently in the United States and make some pennies on the dollar? You might find yourself in a year from now having a $39 million check of your own. You thought about that? Number 4, you don't want to go through the work. I get it. You don't want to inherit a trust fund. You don't want to change families. You don't want to be the CEO of PG&E. You don't want to go commit a felony. None of these things make sense. So how about this instead? Go work 168 hours a week for the next 50 years. At that point, you will maybe amass just as much money as the CEO did this one year, and then you can look back in your seat with your hands behind your head. You can think to yourself, I fucking made it, baby. Can't be mad anymore because now I've got $12 million. But you're kind of skipping over the $39 million bonus part. But, I rest my case. This is one of the last viable options for you if you really are trying to fix your situation. If you're frustrated with the pinnacle of capitalism and the really fucked up CEOs out there, there's not much better answer. It's either this or get fucked, kid. I mean, that's it. That's really your choices. And that brings me to number 5. If 1 through 4 fails, just accept that you're not as good as this leech CEO. All right? This person's playing the game. You don't want to play the game. You don't want to leech off of the people investing in your company. You don't want to leech off the executives. You don't want to hand out half-assed apologies. You don't want the water cup and the foam. The shit. Don't know what to tell you.
Create this, further this narrative of 1% 99 being relevant somehow to this AMC stock thing. Just garbage. All right, one more. I can't even pick. Year after AMC Vegas reunion part 1. Okay. That's awesome. Exit strategy. Let's create our exit strategy. Oh, man. Market news from Froggy Styles. Finally, good news. Finally. AMC talk is pretty much dead. It happened. SEC allowing a controlled squeeze. All these things have been said many times. Over and over. Fuck me. All right, Benji. Go with Benji.
We have another new tweet to go through. Let's check this out from
info is where you go.
AMC to the moon. They said Citadel Securities, the market maker, can short companies through Citadel LLC, which is a hedge fund, and send buy orders through Citadel Connect, which is a non-registered dark pool. Not suspicious at all, huh, at Gary Gensler? So this ape is making a really good point, again explaining how it's far from a fair market. Explaining how Citadel, for example, can do all this stuff under one umbrella, basically controlling the entire market like puppets. This needs to be looked into, and this is definitely suspicious. We have a few tweets to go through. Hey, at Elon Musk, how about buying the rest of AMC's float and have the shorties cover real fast? Then the AMC apes use our profits to purchase Teslas to help with earnings and help Tesla with the shorts. AMC is at 21% short interest. So,
well, actually, I mean, that was from April 4th, so it's not at 21 anymore. But
few things on this, guys. Would it obviously be awesome for Elon Musk to get involved with AMC and do something such as buying the rest of the outstanding shares of AMC?
No, see, he likes to make money
to drive up the price and to really hold the shorts accountable. Yes, that'd be awesome. And
yeah, that would be holding them accountable by God.
Users just joking, but they're asking Elon to do something which is obviously illegal. They're telling him to buy shares of AMC and then therefore will buy Teslas to help him there. That's obviously not allowed, but I definitely hear where this ape is coming from. But side note, do you guys think that Elon Musk should buy up all the rest of the shares of AMC?
Yes.
Or do you think that the retail investors should continuously keep buying until we own the entire float? But if you want to stay up to date with everything else that's going on with AMC...
I thought you did, and I thought there were more tweets to go through. Fuck. Well, the state of the grift is strong. I don't see much change at all. Honestly, I see no change. Why AMC can beat $1,243. Yes. Because, you know, it doesn't have to beat $20 first. 80,000 shares left. That reminds me of this other post. If I can find it. Talking about how 1802 was such a big deal. Is it? Oh, look. Oh, and man, I'm just skipping all over the place, but market makers have a huge problem. We looked at this video on Friday, and Short the VIX discovered the true meaning of short volume, which is funny. And then you see here on Reddit, this person here also discovered it. A short sale is a meaningful indicator of buying activity, and they're like, what? I don't understand. I don't understand. Here it is. How big of a deal it is that we closed above 18 on 4/14. Big. It's actually a really big deal. We closed above 18 yesterday, and here's why. Hedge funds and market makers did everything they could to bring the price below 18 before the close. Between 4/13 and 4/14, we battled at or near 18 countless times, with millions being spent in the dark pool around the same price point. Robinhood and Webull apps, as well as Yahoo, were showing it dip from 1802 to 1790 suddenly and mysteriously before the close, which it did not. Why, though? Options expiration is why. The close above 18 meant 15,000 $18 call options expired in the money that otherwise would not have, which would create a mass of buying pressure above 18 at the start of this coming week. I believe it's T-2 or T-3 days to settle. So Tuesday, T-3. If we had in fact closed at 1790, all these options would have expired out of the money and worthless, meaning they could not be exercised and those shares could not be purchased. 15,000 contracts representing 100 shares each equals 1.5 million shares that can be exercised on and bought at 18. Where would those shares come from? Presumably, the 1.5 million shares would come from the other end of the trade, the individuals or institutions that sold the calls. If you personally were to go in and sell a call option right now, you would have to own the 100 shares of underlying stock to cover the call if the buyer were to exercise. What if those calls were sold without underlying shares of the stock to cover/secure them? That would be called naked shorting. No. That's who engages in naked shorting? Market makers and hedge funds. So, where would those 1.5 million shares have to come from? Then, if these call option buyers decided to exercise and say, I want my shares, market makers and hedge funds would have to cover. That's right, I said the magic phrase. The market makers and hedge funds would have to cover. How many shares do market makers and hedge funds have exactly? Well, just a shade under 1.5 million. As it turns out, 1.4 million shares available as of 3/15 on 4/14. So, are they talking about the shares to borrow? Let's look at Stonko Tracker. They are just, yes. 1.4 million. So that's where they're getting that number from. So look at all this nonsense being thrown together here. How many shares do the market makers and hedge funds have? They have 1.4 million shares available. Those are the shares that are available to borrow for short selling. The market maker and hedge fund don't have those shares. What are you talking about? You're colluding everything. If all $15,018 call options are exercised, market makers would have to give up their 1.4 million shares, plus go buy 100,000 shares on the market at any price. Okay. Who would decide the price then? Whoever is holding the shares to sell them? Not really. If only 14,000 of those calls were exercised, market makers would have to cover with their 1.4 million shares available and would then be left without any ammo to drive down the price of the stock, meaning the bulls could run away with it from there. The last time there were 1.4 million shares available was 3/24 at 3:15 p.m. Eastern. The next day, they used up all but 45,000 shares available, but couldn't keep AMC buyers from forcing the close above $20 that day. We closed at 2024 on 3/25/22. What happened the following Monday? 3/28. A nice fat 44.91% green day. This is effectively what happened when AMC ran it from $8.01 to $12 to $72 last year. Buying is the only thing that pushes the price up, and that is the only thing that forces shorts to cover. I mean, that's probably the only true statement so far in here, right? Right now, through pre-market Tuesday, I believe hedge funds and market makers will try to drive the price down as low as they can, certainly below $18 to discourage the option contract holders from exercising and purchasing the 1.5 million shares at $18. I don't understand why they would do that now. The options have already expired. Whatever. It's this psychological fuckery that we are fighting against most of all. It's our basic human psychology they're messing with. Many of these call option buyers are looking at after hours price of $17.92 and thinking, no way I'm going to exercise my call options and buy shares at 18. But instead, if they decided to exercise and buy, even if their purchase price is 8 cents or 10 cents above the current trading price, it'll push the bid price up, which pushes the stock price up, which creates enthusiasm and more buying, which pushes the price up even more, which grabs the attention of the FOMO crowd, which pushes the price up even more, which gets it airtime on TV, which gets more buyers, which pushes the price up even more, and of course, begins to burn shorts. Why do you think smart money calls us dumb money? Why do you think we all so affectionately refer to one another as quote-unquote retards? Because only a quote-unquote retard would exercise their $18 call option, right, and purchase 100 shares at $18 when that stock is currently trading for less than that, right? We've done it before. We can do it again. I mean, this is... I can't get over the fact that they're saying that the market makers and hedge funds have 1.4 million shares available and that they would use those shares to sell to call option holders who would exercise their options, and so they have to get shares from somewhere, and so they're going to use the 1.4 million shares that are available to borrow. I mean, that's just ridiculous. No, they would probably naked short them, and they would turn around and buy them from the market, cover those, and that would be it. And it would just be like, normal. Like normal. This is all true. I've been here since February of 2021. Imagine being here that long and not, thinking, does AMC get a stock split too? If not, I hope AMC are in the same basket in MULN too. This is, you could go and read this if you want. It's really interesting because this person, Best ST Careers, kind of, yeah. Huge bullish bet. Sold puts expiring tomorrow with a strike price of 25. Way out of the money. This is mega bullish. Okay. Well, we already know. We've already discovered. We've already exposed the reality of the option chain and how the market makers generally are not buying the shares and shorting the shares that the apes think they are to hedge their positions. $5 puts. Great. So they post. Should just go to the posts. $25 in AMC gift cards to get $5 back. Great deal. $25 seems to be an important price point. History often repeats itself. Over $4 million in the dark pool today. Oh boy. So what do you think that means? What do they think that means? Bullish pennant set up today 4 days ago. Cool. Oh, they submitted it twice 4 days ago. 2 different posts. Took the 9-year-old to our favorite theater to see the new Sonic movie. He says he loves AMC. Me too, kid. If there's anything I've learned over the last year, it's how to identify intraday downtrends and when to average down. I'm not scared. I'm ready to double down. You learned that? You learned that. Okay. You learned that. Remember when that was a catalyst? Bull flag pattern from Robinhood. Okay. I thought that was a pretty amazingly bad post. Right there. How big of a deal is it? Then here's somebody who did not get the memo about short volume. AMC has been averaging over 55% short volume daily for almost 3 whole months. Clearly, Ortex's estimated short interest should decrease, right? Well, no. Me being returned by my captors after they listened to me talk about AMC for 2 hours. Okay. All right, checking back in on the futures market. The Russell's down 0.62%. The NASDAQ 100 is down 0.9%. The S&P 500 is down 0.6%. Crude oil's up 1.2%. Natural gas is up 3.27%. Wow. And the VIX futures are up 3.11%. So, looks like we're going to have another interesting week, perhaps. Market. So, well, that's it. It's Easter Sunday, so I'm going to go and make my Easter dinner at this point. So, I will say goodbye to everybody. Thanks for checking out the stream. If you would like to join the Telegram group, that link's in the description. And we'd like to have you over there. We would love to have you over there. And beyond that, we'll check in middle of next week or so and see how it's going, unless there are any emergencies that come up between now and then, which is entirely possible. But barring that, we'll see you next week. Have a good one. Happy Easter.